Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, we'll look beyond the AI build-out at the biggest infrastructure investment opportunities outside of data centers. Plus, we'll check back in on SpaceX after the IPO. Is it a buy, a hold, or sell? We've got the insight. Let's begin with our expert panel on three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Josh Schaefer, Megan Leonard, and Al Root. So the market pretty much freaked out this week, Josh. It could have been a lot of things: inflation, tariffs, maybe something somebody said, Google, Jamie Dimon. What do you think?
I think the biggest thing that happened this week, Jack, is just inflation fears. So you've been waiting for the summer storm. We usually get at least one every year where people start to get really worried about something. Last couple of years, it was more of a growth scare story. Now growth looks fine. No one's worried about the labor market. Instead, it's, oh boy, is inflation really going to be okay? And what was driving that was that big spike again. You've got in oil. You saw WTI crude here in the U.S. going above $90 a barrel. Brent crude over $100 a barrel again at one point this week. That's driving your bond yields higher. 10-year Treasury yield hit 4.7% this week, its highest level in 18 months. And that, I think, started to spook investors of, okay, maybe higher for longer rates. We don't know when this war is ending. Maybe oil is going higher. Not even good earnings can help that kind of story.
Yeah, so earnings were pretty good, but clearly not good enough.
Earnings are great. If we're being honest about just the profits that you're seeing, they are fantastic. You're looking at the S&P 500 now pacing for earnings of over 25% year-over-year growth. It'd be your best quarter since 2021. That's 5 years. And so you're seeing great actual earnings. The stock reactions, though, not so great. So you look at the S&P 500, average company that beats on both top and bottom line, only increasing 0.8%, less than 1%, about in line with what you see normally. But if you miss right now, your stock is getting crushed. You're down over 3.5%. That's well over the 5-year average. I think Intel was a great example of this. You look at how it traded on Friday. They doubled Wall Street's estimates for earnings per share. Stock fell over 7%. It had been up 300 over the last year, and I think that's the problem for a lot of these stocks. After a big rally, it's hard to meet that high bar.
That's asymmetric risk, right? Good news is bad news is horrible. Real quick, you mentioned 4.7. Are you getting worried about the bond market yet?
I think it's time to get worried about the bond market. Our technical analyst, Doug Bush, who looks at the charts and has a great eye for where they're headed, he sees 5%. And I think 5% is an area where equities are going to struggle. I think you might see some folks take some risk off the board if you get toward 5% on that 10-year.
All right, I want Al to dig a little deeper into earnings for us. But first, Al, why did a reader of Barron's decide that you were a clown?
Well, so I was...
That was what the email said.
Yeah,
Al,
we ended up friends at the end of the day, but it was over Tesla. And I suggested that Elon Musk's superpower, which of course is basically convincing people to give him full credit for potential, was fading, right? Tesla's earnings were dreadful, big miss on the bottom line, despite the fact that they sold 25% more cars. And then, you know, the conference call, the hype on the conference call, you know, robots will be the biggest thing in human history. They came up with a new idea, the Megapod, which is essentially like a modular AI data center that you can put anywhere. So maybe that, and it just didn't juice the stock. The stock was down 14.5% on Thursday. Following earnings, it was down it was down 2%. It was down like 19% for the week. It just wasn't good enough. And it's pretty much AI hype needs to become AI reality.
Yeah, that's a great description. Google, not so good either.
Well, no, Google's great.
Well,
right? Actually,
as Josh said,
I think that Elon needs to run Google so he can tell a story about this incredible CapEx build and how it's going to be wonderful, and then that can settle down Google investors. And then Sundar should run Tesla and just focus on AI execution. So Google, 80% cloud growth. Big earnings beat, stock went down 7%, and it's just this nervousness. They raised their capex, and now instead of people saying, "Oh, great, AI is wonderful," they're saying, "Oh, should I be spending that much?"
Sure.
The thing that stuck out with Alphabet too is that cash flow negative quarter, their first negative quarter of cash flow since they came public in 2004. Microsoft, not quite that story yet. Microsoft still has plenty of cash flow, it seems, for now. That stock's down over 30% from its 52-week high. I think you might get a different earnings reaction out of Microsoft. A lot was in that price in Alphabet. It had risen 80% over the last year. It's been a great pick for us. Microsoft's been a dog. Maybe the expectations will be just low enough for them to surprise upside.
I got to make it in here real quick. GE Vernova TE connectivity, also pretty good, but
Great
not
earnings,
good enough.
terrible reactions.
All right, let's talk Fed. I hope we get a better reaction this coming week from Kevin Warsh's second meeting.
Second meeting, yes, and it will probably be much the same as the first meeting. I think we're going to have rates holding steady. We do still have a pretty wide odds for a rate hike, but I think that's a little bit overblown given the uncertainty of the situation.
Market does seem to be shrugging off tariffs. Do you think that'll play into what the Fed has to say at all?
I do think that it goes back to this inflation that we've been talking about. So we did have those higher oil prices. We're seeing, big gains at the pump for, the retail folks. $4.11 right now. We have gas and diesel prices in particular heading up. That's going to change the dynamics of the next couple inflation reports. Tariffs, on the other hand, we did get those new tariffs coming in, but they didn't really change the overall trajectory of that effective tariff rate. So I think that for now, a lot of those pass-through is probably the worst is behind us. That said, we did get some additional news late in the week about maybe new tariffs on the EU. That could be something that does change the dynamic, especially if they are a lot higher.
All right, and the president's not happy about that. Thanks very much, Megan. The market facing a triple threat next week with big tech earnings, the Fed meeting, and rising geopolitical risks. Apollo Global Management Chief Economist Torsten Slok is here with his insight next.